Good afternoon and welcome to ActivTrades Monday Market Matters webinar. It's Paul here, and today we're going to focus on ending the year strongly and looking at how we could start to build our trading plan for 2026. So, of course, it's a neutral state of events that as we come towards the end of one year, we want to take a moment to look at how we've done, what we can learn, and then use that information to help us build out a more finessed trading plan so that we can make 2026 our best trading year ever. Okay, so what we talk about today, well, pretty much like all of our other Money Market Matters webinars this year, what we will look to do to focus on is also just have a little talk about the news in terms of how we finished last week, and also what we can sort of start to see over the next 2 weeks, if anything at all, as we enter the holiday period, just so that you're in a position to understand sort of what to look out for over the next couple of weeks. And then, for our education element, as I said, we're going to talk about what can we do to make 2026 our best year ever. So, of course, when we look at that, where do we start to make next year our best one, all right? What can we do to help ensure that we start on the right foot in 2026? And how can we create a trading plan that supports us in our endeavors? So, what I'm going to be sharing with you is just one or two small exercises that you can take away and work upon over this holiday season, over the next couple of weeks, and hopefully, as I said, hopefully it will help give you a little bit of insight into how successful traders operate, and also how what's the sort of work you can do in this kind of quiet period to help ensure that you have a good start to 2026. And then, as always, okay, time permitting, what we'll do is we'll switch across and have a look at the live markets, okay, and see how they finished up last week and how they are likely to finish 2025 over the next week or two. So, always plenty for us to talk about. As always, if you have any questions or if you have any comments, then you're very welcome to put them into the chat box, and we can take them on board, and I'll help you where you are. Thanks, Ollie. Nice to see you here. Okay, great. Thanks very much for your interaction. And as I said, if you've got any questions or comments, please feel free to put them in the chat box, and we'll do what we can to help. So, Money Market Matters has always been ActivTrade's regular webinar series. Okay, with the aim being to help you start the week in the right frame. Okay, as we prepare for the opening of the US markets in about 25 minutes' time. So every Monday at 2 o'clock London, we take a look at the major news to be aware of for the week ahead. We do the main thrust about an education piece, helping to build your trading knowledge. We have a look at the ActivTrades platforms and tools that are available, and have a look at the live markets, okay, at the start of the US session. So there is always plenty to discuss. We're never short of topics to talk about. And as always, it's about sort of trying to share with you as much as we can over the sort of the next 50 minutes. Okay, before we start taking a look at the news, well, if we first look at how we ended last week was really the kind of what I would probably call the last sort of final full week of trading of 2025. And despite the, let's say, sort of the volatility that might have been seen over the last week or two, generally, we kind of ended the week on a positive note as we saw the kind of AI story started to take on a sort of more positive sentiment. Okay, there has been a little bit of volatility regarding the kind of sentiment around that overall AI story, which has been a predominantly strong story for the whole of the year, and we'll be able to see that later on when we switch across to the live charts to see how that has played out. But generally, it was a kind of a positive end to the last full trading week. Of course, there will be some traders, especially those focused on US equities, who will be keen to sort of understand what, if any, opportunity the Santa rally will bring to us over the sort of next couple of weeks. That is normally a little bit of a phenomenon that we see sort of running, as I said, over the next couple of weeks, but sometimes particularly in between the sort of Christmas and New Year period, and including many US equities traders, like to sort of look at that as a way to effectively ride a bullish move in some of those particular equities and perhaps those indices. My view would be that actually December has been, for the most part, December has been mostly bullish, and perhaps that Santos rally has already sort of moved its way, and moved its way forward. And I'll be intrigued myself to see, what, if any, energy or enthusiasm there is over the next coming weeks to take those stocks higher. And I think what will probably be of interest is whether people will get sort of closes of this year at all-time highs. I think that's what will probably sort of drive some of the sentiment. But it has to be said, what we normally see for the most, let's say for most kind of operators, certainly for most of those people working in government, etc., that the amount of economic news, tails off quite dramatically, as you can probably see there on the chart and the slide in front of me. Invariably the sort of the vast majority of the world is sort of takes a break for these last couple of weeks of 2025, and that is reflected in the economic data. So whilst there is a fair bit of economic data in terms of the sort of let's say the sort of tier one high impact data that moves markets, there's very little. Tomorrow we have some Canadian GDP data, and we also have some US preliminary GDP data, quarterly data, and people will take an interest in that to sort of see what, if any, impact the Trump tariffs earlier in the year, has that kind of filtered through into the overall GDP numbers. Wednesday, Christmas Eve, we have unemployment claims numbers in the US, and then on Christmas Day here, certainly in the UK and Western Europe, we have Mr. Ueda at the Bank of Japan. He will be speaking. The governor is the governor of the Bank of Japan. Of course, what we saw last Friday was the Bank of Japan raised interest rates 25 basis points to 0.75. And so, of course, what generally happens is that a few days after such an event, it's not unusual to find members of that respective central bank coming out to sort of either dampen expectations if there's been some, let's say, sort of giddiness afterwards, or invariably steady the ship if markets have interpreted the data sort of to the negative side. We then have, sort of next week, Tuesday, 30th of December, interestingly, is the FOMC meeting minutes, from the last minute, which I will be curious to see kind of, how impactful that will be based upon the number of operators in markets. And then, once again, unemployment claims on Wednesday, the sort of the December 31st, New Year's Eve. Just as an aside to that, we will return, on what will be Monday, the 5th of January. The Monday Market Matters will be joining you in 2026, on 5th of January. And we'll be talking about trading US markets in 2026. So I hope that you're able to join us for that. But as I said, it's a very thin economic calendar over the next couple of weeks in terms of high impact news, but invariably, people will be intrigued to see, what, if any, let's say, non-formal economic news. So, for example, if there is either ratcheting up tensions in parts of the world, or possible peace plans in other parts of the world, that might be the thing that has a sort of an impulsive, immediate impact upon markets. Okay, so let's talk about making 2026 our best trading year ever. As the slide says, I think we can all agree that 2025 has been quite a wild year, both in life and in financial markets. We've all experienced changes to our ways of living and working our lives in one way or another. Regardless of all of that, there will be many traders who have made it to the end of 2025 having had a very good year. Others, not so much. So the question to start to think about is, when you look back upon 2025, have you had a good year, or have you had a challenging year? Now, I appreciate that some of that will also go down to, what your definition is of good, challenging, success, failure, etc. So I do appreciate there is a little bit of individual perspective that comes with that. But the truth of the matter is, the year is coming to an end, all right? And regardless of how your year has been, whether it's been a great year or a challenging year, how you're going to use this year to help you improve next year. Because, ultimately, as traders and investors, that's all really we're looking forward to doing. How can I be a better trader tomorrow than I was yesterday? Okay, and sort of that kind of commitment to the process, to the work of, sort of trying to become the best trader investor that you can be. And it is about, okay, how am I going to use this year to help me make a better year for myself next year? So with that in mind, in this session, we'll look at some of the ways that we can learn from this year's trading experiences and then channel them into making 2026 our best year ever. So, as I said, start with those questions, okay? Has it been a good year? Has it been a challenging year? Regardless of what, have you thought about how you're going to use the experiences and the data from this year to make you a better trader next year? Okay, these are the key elements. Part of this feeds into understanding what a private trader's biggest challenge is. Okay, of course, I speak to lots of traders, all the time, every day, of the week, of the year, and understanding and talking with them about their biggest challenges and the biggest successes, etc. And one of the key elements I find is that when it comes to traders' biggest challenges, is that very often they can't see the wood for the trees. Okay, that sometimes they lose the overall perspective of what they're engaged in because they are heads down, working away as hard as they possibly can, okay, to be the best trader they can be. But in doing so, they kind of lose the overall perspective. And as I said, they can't see the wood for the trees, okay. And that's not a criticism. That's just a reflection. As I said, we're working hard to be the best, and they sometimes get a little bit tunnel focused, especially if they're, let's say, private traders working at home on their own. It can become quite a lonesome endeavor, and it becomes easy to sort of become a little bit target fixated rather than being able to sort of step back and see the bigger picture. And that's one of the reasons why I encourage going through and doing this kind of exercise at the end of the year, just to help you gain some perspective on your own trading progress. So, of course, as we run in towards the end of the year and I'm talking with traders and getting their feedback and understanding them, what I always hear are many of the same challenges that traders face. Okay, they feel that they are experiencing a unique journey, but actually there's an awful lot of similarity in some of the challenges that traders have to deal with. So, I hear it lots about traders who have, they've missed moves, okay, for one reason or another, or on the other side of the spectrum, they've overtraded, okay, they've probably traded too much in terms of frequency and size. They may have exercised poor risk management, or for some people, no risk management, and that has kind of contributed towards the challenges they've faced. Some of them might have had challenges with cutting winning traders too quickly, sort of trying to grab at profits, and other traders, maybe even the same traders, sometimes letting losing trades run far too long, okay, because of loss aversion bias, or they have scored poorly on the disposition effect, etc. So, for those of you who are watching this, whether you're watching it here with us live, or you're watching this later on the webinar archive or on the ActivTrades YouTube channel, have you experienced any of these challenges in 2025? Have you missed particular trades? Have you at times overtraded? Have you exercised good risk management, or have you had challenging moments with your risk management? Have you, if you look back on your data, have you, cut some of your winning trades too quickly? And alternatively, have maybe you let some losing trades run a bit too long? Okay, this is an opportunity for you to sort of take a moment to reflect upon that. And I always say, as someone who's mentored and coached traders and live trades myself, okay, there's no judgment, certainly from myself. It's more about, this is an opportunity for you to be, honest and transparent, if not with me, with yourself, about some of the challenges you've experienced. It's part of your journey as a trader. It's part of growth. It's part of life that, you will have challenges to face and overcome. And part of it is about sitting here and thinking about, okay, what have been the challenges that, you have faced? If in your debrief, you have faced no challenges this year in your trading, well, then I take my hat off to you. Well done. Congratulations. Enjoy it whilst you can. But the vast majority of humans will have had one or two challenges. And as I say, that's fine. That is part of trading. Okay. It's not the challenges that are the issue. It is how you respond to the challenges. That is the issue. That is what differentiates the long-term successful from those who continue to struggle. What I find then is that, there will be some traders who, when they look back on their data from 2025, they've had a very challenging year. They have had a real difficult year for it could be a multitude of reasons, a multitude of reasons. Remember, those of you who've joined me before so that, I always look through the trading through the prism of the 4 M's of markets, okay? Market, method, money, and myself. And, those who've had perhaps a challenging year might well be looking at that and have had challenges in all 4 of those areas. But sometimes what that means is that actually the trader is looking for a revolution. Okay, they are looking for a revolution. They want to completely change everything they do. Okay, they want to throw everything out, start with a fresh piece of paper, and start 2026 afresh. And whilst that has its benefits, whilst that there are some positives to that, generally I have found through my own trading experience, from working on trading floors, from coaching and mentoring many traders over years, the reality is that actually most traders are after evolution rather than revolution. You can use this time and this experiences and these exercises as a way to help you evolve to the next level as a trader. As I said in the previous slide, everybody has challenges as a trader, okay? It's part of your journey, all right? Welcome to trading. It is how you respond to that will, define the trajectory and the pace of your journey in your trading business. And as I said, looking at how you can evolve your trading based upon your own data, okay? Based upon creating plans and goals that are relative to your overall performance rather than just an arbitrary number, can be a great way to turn a challenging year into a successful future. And that's a thing that I encourage all traders to take on board. So as I said, many traders will have had a wonderful 2025, others perhaps not so much, okay? However the year has been, what I always find is that great traders or traders working towards being their greatest, trading self, they will take the time to review their overall trading, okay, including their losses during 2025, and then use that to power them to greater heights in their trading in 2026. So why don't we have a look at how we could do that ourselves? What is the sort of exercise you could take away and start to work upon over the next couple of weeks that would help you do that? So there's a great quote by the previous American president, Mr. Franklin, okay, by failing to prepare, you are preparing to fail. And he's absolutely right. He was right when he said that a couple hundred years ago, and he's absolutely right. And he's right for traders, okay? So part of it is about reviewing the year that's gone by as a way of preparing for 2026, taking the time to sit down, review what you've been doing, and using it, okay, as the starting point for preparation to make 2026 your best trading year ever. And as it says there, if you don't particularly want to listen to me, then please, by all means, certainly listen to a true market wizard. Paul Tudor Jones is my own sort of professional trading hero. He talks about how macro trading requires a high degree of skill, focus, and repetition. Life events such as birth, divorce, death of a loved one, and other emotional highs and lows are obstacles to success in this specific field, finance. So, as he said, it doesn't matter whether you are just a private trader at the start of your journey, or like Mr. Jones, okay, Mr. Tudor Jones, a successful, hedge fund manager. Trading in all areas requires a high degree of skill, focus, and repetition. And we all have events, okay, that can challenge us outside of our own particular trading. And so part of our job as traders and investors is to be able to recognize that and to ensure that we have plans in place to help us work and manage with that, and also to learn from experiences here. If you look back on 2025, have you had to deal with such such those life events mentioned there? Okay, have you had other emotional highs and lows in, your, let's say, your non-trading life, and have they impacted your trading performance? Okay, and once again, as I said, it's no, there's no right or wrong. There's no judgment. It's about you just taking a moment to reflect upon that and realize, if you have had that experience, well, then, that's part of life. As I said, we all have challenges. It's about actually, how can I deal with that? What do I need to learn from this year that I can take forward to make next year a better year? How do I need to update my trading plan? How do I need to update my sort of tactics and procedures? What do I need to do? Use this time, productively to help you going forward. So here is your homework. Here's your tasking for the holiday period. Okay, and this is all about business inventory. Okay, let's call it a business inventory exercise. So the reality is that all good businesses keep a close eye on managing their stock. All right, so I appreciate when I was a youth, okay, and I had a Saturday job in the B&Q DIY when I was like 16, 17 years old. Every 6 months we had to do a full and deep and thorough stock check of every nut, bolt, and panel of wood on all of the all parts of the shop. Now, I appreciate these days, okay, that's done much more efficiently using electronic means. Nonetheless, all good businesses, they keep a close eye on managing their stock. In your trading business, okay, it's your knowledge, it's your experience, it is your intellectual property. That is your stock, okay, that is your stock. Now, people might say, well, Paul, I'm just trading my own little strategy. Well, yes, that's your knowledge. That's your experience. That is your intellectual property. And like any good business, it's important to do a stock check every year, to sit down and do a stock check, okay? If you don't do it, well, then you are operating from false assumptions. And that means that the decisions you make are more likely to be wrong, or more likely to go wrong, quicker, if you're operating from a base of false assumptions. So, it is in your best interest to take that time to do a stock check, to do a business inventory. So here is your particular takeaway task for the holidays ahead, okay? What I want you to do is, and me being the type of person I am, I like to sort of just get a piece of paper. I just get an A4 notebook out there. But I appreciate other people might prefer to tap away on a fresh document. That's absolutely fine. How you do it is absolutely up to you. But what I want you to do is write down everything that you have learned about the 4 M's of trading. Write down everything you've learned about markets, about methods, about money, and about managing yourself, okay? I want you to just sit down and write. And actually what you might find is, even if you're just doing it as bullet points, what you might find is that there might be pages and pages and reams and reams and reams of elements that, you have learned about the 4 M's of trading. As I said earlier, many private traders, they are head down working away, and perhaps, as I said, they can't see the wood for the trees. And so they lose sight of actually how much progress they have made in their trading. It may not feel it, okay? It may not feel it when you're engaged in it every day, but when you take a time to learn, to sit down and write out everything you've learned, well, what you'll realize is that actually you've come, a great distance in your journey. What I also want you to do is I want you to write down all the trading ideas over the last year which have resonated with you. That doesn't mean they have to have been successful. That doesn't mean that they have to have been yours. Maybe you've watched something on a YouTube. Maybe you've watched one of my own videos here. Maybe you've read a book, etc. And the ideas, they resonated with you. There was something about them that basically made sense to you. And on the flip side of that, okay, write down all the trading ideas that you've come across that you resist, okay, that you've seen it or heard it, and you've made an immediate decision that you don't like that, or it doesn't speak to you, or you don't understand it, etc. Because even that is important. Even that is important to help you gain an understanding of the contrast between the ideas that resonate with you and the ideas that sort of you resist. And also, I want you on another sheet of paper to write down what you believe you still have to learn about the 4 M's of trading. What do you still believe you have to learn about markets, method, money, and myself? Okay. What do you believe that are still your areas of weakness? And as I said, you don't have to share that with me or anybody else, okay? And you can keep that to yourself, but at least be honest with yourself, okay? There's no point in sort of, as I said, it's sort of making decisions off false assumptions. Be honest with yourself, okay? This is an opportunity. As I said, there is no judgment. This is about helping you take a stock check of your business inventory so that you're in a position to start to make a good plan to go forward next year. And then, of course, once you've done all that, it's time for you to review your list. Okay, so by writing this down and about writing down what you've learned, what you know, what you've experienced, you start to provide that perspective and confidence that certainly sort of private traders very often lose. Okay, it helps you, as I say, it helps you to be able to see the sort of the wood for the trees. By writing down what trading ideas have resonated with you, well then, you might start to have the kernel, the start of your next trading method or your next trading idea. Very often, okay, some of my own best trading ideas have come out of this exercise. Write down what has resonated with me, what have I liked, and out of that is started kind of my sort of almost my kind of subconscious, unconscious sort of working away on that. In the same way, writing down about what you do not like or what opportunities you resist gives you an opportunity to reflect upon why are you resisting certain ideas or certain concepts. What is the truth there? Are you resisting a trading idea because you don't understand it, because it doesn't resonate with you, because it might appear like it's just a bit too much like hard work? All right, be honest. Be honest, okay? Why are you resisting it? Is it genuine resistance, okay, or is there something deeper going on with yourself which you need to take a moment to understand? And that can be quite an interesting experience, ladies and gentlemen, if you do that openly and honestly and with curiosity rather than judgment. And the thing is, by writing all of this down, and in particular writing down what you need to learn. Well, then here we have the start of our 2026 goals and objectives. Okay, so write all those things down from the previous slide and then take your time to review that list. And as I said, if you do it properly and take a bit of time, it becomes a bit of a fascinating experience. Okay, it really does become a fascinating experience. So I'm going to share an example from, I think it's from about 2 years ago, from one of my own clients called Trader Vic, okay, who went through and did this, this exercise and shared it with me, okay, and I'm just sharing just some of the bullet points that Vic created, okay, and and actually how it helped them. So Trader Vic, in terms of markets, and they realized their best performance was actually on intraday trading rather than sort of swing and position trading. And what they like to do is they like to focus on the DAX in the morning and then trade the NASDAQ in the afternoon. And certainly in the afternoon for us here in the UK and Western Europe, so effectively trading the open of the US market. So that is what their data and their stock check was showing up to them. In terms of methods, okay, in terms of the tactics they employed, they realized they kind of liked to trade in the 3-bar reversal on intraday DAX. That was their kind of favored tactic for the DAX. But they also realized themselves that they struggled to trade the crypto effectively because it was too much volatility for them. Okay, they found that they operated better in sort of FX markets, indices, commodities markets, equities markets. They realized that they preferred markets that were a little quieter and a little cleaner in terms of their price action. In terms of the money management, okay, some of the points they realized was that they were at their happiest when they were only risking 0.5% of their capital per trade. That allowed them to operate. They didn't sort of feel FOMO, or they didn't sort of feel as if they were being overstretching. And they also realized that they themselves were comfortable when they had less than 6 positions open. Okay, if they tried to have more than 6 positions open, it became a bit too overwhelming for them. In terms of managing themselves, okay, and what they realized, Trader Vic realized, was that they traded much better in themselves when they were sat down focusing on trading for opportunity rather than trading for money. Okay, when they were trying to force their trades or push their trades or build their profits as quick as possible, that was invariably when they traded at the most poorly, as opposed to when they were prepared properly and they were sat there looking just at markets for opportunity. That is when they tended to trade much better. And they also knew that they needed to avoid burnout. Okay, they needed to manage themselves better because they learned that when they became burnt out, that tended to lead to over trading because they were making sloppy choices, sloppy decisions. So, as I said, there's just a few of the bullet points that Trader Vic came from going through this exercise, doing a stock check, doing their business inventory. Then the other side of it is, well, they were starting to look at, well, actually, how do I change this for the better? So, what they're able to sit down and realize is that in terms of their strengths, that they had good routines, okay? They tended to have a good process, good routines, which allowed them to follow. And they were also good at journaling their trades and being able to, create records from the trades and use that as a way and a means to get better. In terms of their weaknesses, Trader Vic realized that they get impatient. Okay, when a trade is just slowly grinding away and not going anywhere, that kind of sort of triggered their kind of impatience. And sometimes they also realized that they were distracted by too much opportunity, that there was lots of things setting up across lots of instruments, across lots of asset classes, and that generally tended to lead to them being distracted. In terms for themselves, in terms of their areas for development, that they knew they really needed to learn about fixed income markets, about bond markets, and also they needed to work on finessing their entries to help just improve their reward to risk. And in terms of some of their goals for 2026, Trader Vic had a focus on 3 good trades per day. That was what to focus on quality over quantity. And also focus on improving their trading metrics, which is like the area of development. It's about working on improving their reward to risk on their each individual trade. So as I said, I just took some of the bullet points from Trader Vic when they did this exercise, but I'm hoping that perhaps you can see how beneficial it was to them. Maybe it was even to you to read that, okay, and hopefully it gives you some insight into how and why you should do this exercise, and how you will not regret doing the exercise. It will help you, start to make 2026 year. And it's also in many ways, sometimes it's a good example of almost like kind of closing the door on 2025 in terms of closing that chapter of your trading life and getting ready to sort of, almost kind of appear as the new you, as in this case Trader Vic 2026. Okay, being able to do that. So it is an exercise that I heartily recommend to everybody to do. Okay, as I said, come at it from a position of curiosity rather than judgment. Come at it from a position of openness and honesty and transparency. Even if it's just yourself who will read it, I guarantee that it will help you. Okay, it will help you progress and and do what's important, which is basically to make 2026 your best trading year ever. That's what we are particularly looking to try and achieve. So, ladies and gentlemen, I hope that has helped. Let's give you a little bit of food for thought, a little bit of curiosity that you can take away and work upon over the next couple of weeks. You'll be pleased to hear that Money Market Matters is here to support you in 2026, every Monday at 2:00 London time, focusing on news, education, active trades, tools, and markets. I said this at the start of 2025 that it's going to be an interesting year in markets, and I'm going to hold that up because I believe 2026 is going to be another very interesting year in markets, and I will hope that you will join us to enjoy the journey. So in terms of what we've looked at on the educational side today, I think it is fair to say that financial markets in 2025, they have provided traders and investors with quite a wild ride. And for some people, the markets will have provided a threat, and for others, it will have provided opportunity. And the question for yourselves is, well, which was it for me? Okay, which was it for me? With that in mind, how do we make 2026 our best trading year ever. Okay, well, we start that by reviewing our performances from this year, asking yourselves questions about, what have been our hardest lessons this year, okay? What have been your biggest mistakes? You're human, you will have made them, okay? But do you know what those mistakes were? Do you know what you need to do to fix that, to make sure you don't make those big mistakes again? But equally, on the other side, what have also been your greatest successes? Now, those success, once again, is down to definition. Sometimes, it might be about a great trade you've taken. Sometimes it might be about great risk management. Sometimes it might have just been managing trading in and around all of the other busy aspects of your life, okay? But you will have had, some good successes this year. Make sure that, you are aware of them. And use all of that as a start of building a plan to hit the ground running in 2026. That in itself would be a quite an amazing thing. So, as I said, I hope that's given you a bit of food for thought. I hope that sort of helps you start to think and consider about what needs to happen to review this year and make next year such a great year. And the good thing is that we'll be here, ActivTrades here in 2026 to help support you with that. Okay, we always love hearing about people's journeys and seeing them, how they are developing and progressing, and that is quite something. So. With that in mind, why don't we go and have a look at live markets for the last 10 minutes or so? We can take a look, have a little look at review at actually how those markets have occurred this year and what that can help us with going forward. Before we do, as I said, we'll be off for a couple of weeks, but we return on Monday, 5th of January, 2 o'clock London time, Monday Market Matters, trading the US markets in 2026. Okay, that's what we'll start this next year with. I think it's going to be an interesting year in US markets. Okay, so I hope you'll join us for that. As always, if you haven't, you can register on the ActivTrades website, or even that QR code will take you there to register. And as always, if you aren't doing already, then please, by all means, follow ActivTrades on our YouTube channel. You'll find that many of the Money Market Matters educational webinars that we've conducted over the year, many of them you will find on the YouTube channel. I appreciate that sometimes sometimes we need to listen to things a couple of times for it to sink in. So you'll find best, a whole host of the Money Market Matters webinars and with other educational content on there that you can make yourself aware of. And as always, ladies and gentlemen, if you've got any questions or comments, you can contact ActivTrades. There is the English desk number there, but also the email englishdesk@activetrades.com. Maybe you've got questions or comments, having watched this. Maybe you've got feedback. We appreciate. Maybe you've got thoughts or comments of topics you'd like to see me cover in 2026. If you wish, you can send them on an email to englishdesk@activetrades.com, and we will try and build that in where possible. We want these sessions to be as helpful and as beneficial for you as possible. So if you just bear with me for a moment, what we're going to do is we're going to switch across to the ActivTrades platform, and we'll have a look at that there and go through what's been going on in the markets. So just bear with me for a moment, and we'll switch across. Here we are in our STAM indices, okay? So what we also have to recognize is that over the last week, we have switched on the futures contracts, okay? We've switched from the December contract to March. So I wanted to show you how we can do this. So by all means, right-click, show all, so that it updates all of the latest charts that we have here. This is how we can go through it. Just scroll through and find the ones we need for here. My list looks probably a little bit different from your own, just because there are so many other assets and instruments that I have access to because of the sort of sharing educational work. But here we go. So that is the US dollar index, which is on the next chart. Let's have a look at here. I've got, I want to update. I'll scroll through here. Boom, 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 boom. Okay. The US Tech March, which is NASDAQ. So just updating that. Got US Russell March, which is the Russell. Okay. Updating that. Here we go. Boom, boom, boom. USA Ind March 26, which is the Dow Jones, USA 500 March 26. Okay, so that's the S&P 500. UK 100 mark. That is the FTSE 100. Okay. Let's see. Quite a few here up. So crude. Okay. So go to the February contract. JP225. Okay. The Nikkei March contract there, and German 40 mile 26. Okay. So it doesn't take long. Just updating that there. Okay. Just to show you how you can do it. Not difficult at all, but of course, what we're interested in is to look at, well, actually, what do the charts look like? What are they showing us? Okay, what can we take forward into the last couple of weeks of the year? So let's just make sure they're all on the weekly charts, just so to starting point for us. Okay, so, and I'll bring up the drawing tool here. So yeah, as I said, Dow Jones, NASDAQ, S&P 500, Russell, FTSE, Nikkei, DAX, and oil. So I've got a pretty good look. So it's fair to say that, we can see that, bang, Dow, NASDAQ, S&P 500, okay, and even the Russell, okay, continue to have been in that uptrend. And even though, last week we had a little bit of a difference, okay, in terms of the sort of charts between them, still, nonetheless, we're still looking at that kind of bullish trend being in place. If I go look at the Dow, that has really, here we are at the end of the year, from where we had here, okay, the run into those tariffs, okay, and then basically in April, the kind of announcement of Liberation Day tariffs, and where we've gone, passing through those highs and continuing to push to highs, that is quite some monumental turnaround, isn't it? Quite some monumental turnaround. And, I think there will be lots of people sort of interested to looking to see, well, will we close at highs? Over the next 2 weeks, will we close this year at the high, which would be quite some turnaround from here back in April, wouldn't it? That is just quite some particular move. Of course, the question will be is, well, will that continue into 2026? And I think, that is going to be the interesting question. As I said, 5th of January, we're going to talk about that trading US markets in 2026. Certainly, if we are bullish in here, I would be expecting that kind of bullish sentiment to continue. That's what we'll be looking at, okay? And especially if we continue to get interest rate cuts from the Federal Reserve, okay? At the moment, they're still looking at perhaps 2 in next year, and I think as long as that kind of sentiment and narrative maintains, I think that will be mostly bullish still for US equity markets. The S&P 500 has done pretty much the same there, hasn't it? Pretty much the same. That has been quite some turnaround, quite some move, really quite astounding move. When I look at this on the daily chart, what I'm going to do is just, we had really basically October highs here. We kind of had a real big sell-off in November, but that turnaround there, we pushed, come back here. The 50-period moving average here, the daily 50-period moving average has acted as some real strong support here. Yep, we did drop it, and then we came right back up it, above it, and here we are. And once again, I think people will be looking to see, will there be the energy and momentum for us to close at all-time highs in 2025? That would be quite some significant move, ladies and gentlemen. There, okay, on the S&P 500, Nasdaq. Okay, we peaked here, okay, at the end of October, and as so far yet we haven't. Right, we haven't made a kind of a new high like the others have, and so people will be saying, well, okay, does Nasdaq have what it takes? Okay, from where we had our highs, okay, up there, that's what's that, 26,400. Okay, I would be curious to see, can that act like a magnet in the last 2 weeks of the year? Can it that draws price up towards it? That's what I'd be working off the base that it is still a bullish trend intact. Interestingly, it was kind of the Russell, which had once again that strong turnaround, but had already closed a little bit higher, okay, at the start of December, and has been kind of going sideways on the weekly chart, okay, but even on the daily chart, we did pull back a little bit, but that pullback has turned around. And once again, I think people will be seeing, does it have what it takes to push and close to the highs? Will there be a Santa rally that basically lifts it into the highs? That's quite something. If we look a little bit closer to home, okay, look at the DAX. I talked about here. This is the DAX in the weekly chart about how the tantrums at 20,000, it took us down to 20,000, we bounced off it, and actually we came back the fastest with the DAX, but then, as you can see, for a long period, for pretty much 6-7 months, we were in quite a tight range there, weren't we? And I was starting to get curious when we came down here. We had a false breakout here, and then we came to the other side of the range. And I was curious to see whether we would break the support and break the 50, but actually we didn't. I thought if we did, well, then we really were sort of going much, much lower. But as you can see, we bounced off it. And actually, we're back up towards the sort of top end of the range. And I think people will once again be sort of looking to see, when I look at this here, I look at this candle here, okay, back in 28th of September, my birthday, was also the highest weekly close of the year, okay? That highest weekly close of on these charts, 24,512. And I think I'll be intrigued to see, does it have what it takes to actually to have the highest weekly close of the year, to end the year in the highest weekly close? I think if we do, that could be seen as being really quite bullish. So watch that over the next 2 weeks, okay, to see how we're doing. On the daily chart of it, as I said, we can bounce strongly, and now we're sat above the 50, the 20s crossing the 50. We've got the kind of level of resistance, and we're in that tight sort of range, that box there. And I wonder whether it can push itself higher on that. If you look close to home in terms of the UK, well, we can see that we were able to sort of, once again, have that reverse, okay, off 8,000. And actually, we have just worked our way higher, haven't we? We've worked our way higher. We had a bit of a bump there a couple of weeks back, okay. I think part of that was a case of what we saw was, as we had the interest rate cuts here in the UK, that meant that sterling has weakened. The FTSE 100 is predominantly these days made up of companies that make their profits overseas. So every time the sterling weakens, it means that UK company, or certainly FTSE 100 companies, their profits look better. So that has actually helped this kind of run here. What we've also had is that invariably in the sort of all of this year is that the UK has kind of benefited a little bit from an anti-Trump trade, where there has been a portion of capital that has basically been rooted out of the US, and that has found homes elsewhere. And one of those homes has been in the UK and in UK companies, and that has helped. Push UK FTSE to high, and actually, that last week, if we look at that even though we traded higher, a month or so ago, actually, that is the highest weekly close on the FTSE there. And that's the highest weekly close on the FTSE. So once again, it'll be seeing, can it maintain that to close this year on an absolute storming year there? That's what we're seeing there with the FTSE. Of course, we've had looking a little bit at some of the oil. Okay, looking at oil. Oil has been pretty much in that strong downtrend, hasn't it? And we were cracked 60. So, a lot of that, I think, is there's a couple of reasons there. One is elements of, let's say, jitters about the global economy. Invariably, people are worried overall about the overall global economy. And if people think that the global economy is stuttering a little bit, well, then invariably that means there's less demand for oil. If there's less demand for oil, the price will likely drop. What we have also seen is that, as discussions around possible peace plans for the Middle East and for Ukraine, that also has an impact on the price of oil, and hence why we have seen that trend for the latter half of 2025 has continued to do. And now I look at sort of $60 as having been support, looking at flipping that to resistance now. So looking at price pivoting around 60, that would be my kind of take. But while oil has been in a strong downtrend, that has not been the case for other commodities, and in particular gold and silver. So let's have a look at them. If you just look at that is the weekly chart of gold, and I think it's fair to say it has been quite a considerable maneuver, hasn't it? Quite some strong trend there. It really has sort of just continued to sort of defy odds and move its way higher and higher, and a lot of that to do with, as we said, elements of trouble and strife in Ukraine and the Middle East. Also, uncertainty about the global economy, uncertainty about Trump's tariffs and his handling of the US economy, all have basically edged towards, the sort of uncertainty trade. And the uncertainty trade has basically just effectively involved buying gold and silver, and as you can see, that has just accelerated away. And it's been a fantastic trend for a couple of years now, but it has accelerated further over the last couple of quarters. And I'm always kind of curious when price starts pushing to highs and they're pulling away from the moving averages. I always start to get a little nervous, but the reality is, when a good trend is in place, you don't fight it. Okay, you find a way to surf it. That's your job. And following gold, and I would probably say taking over gold, we have seen is silver as well. Okay, so if you look at silver for this year, I mean, we were in a kind of a range, pivoting around $30 for a long period here. Okay, for about a 6-7 month period, pivoting around $30. But then once we broke out here in June, well, it's for the most part just been one-way traffic. We talked about it a couple of months ago when we put in this double top at $50. Okay, you and I thought we might be a bit of a profit taking, drifting back to the 50, but that's just not happened, as it is just accelerated. And so, from starting the year, if I look at this here, okay, we started the year open at $29.60. Okay, now we are sort of tickling the soft underbelly of $70 there. It's been quite some astounding move there. Okay, and once again, once price starts going vertical, I always start to take a keen interest, if I have a long position, because I'm a great believer that it's very hard to defy gravity. What goes up tends to come down as well, like that. So I always start to get curious. Okay, so I'm watching that very closely at the moment. But once again, it's not a case of me trying to pick a top in silver. It's not me trying to fight silver or fight that trend. Not whatsoever. Okay, it's just recognizing the price action as it plays out, and it has been quite some considerable price action there, hasn't it? Along with that, okay, we can have a look at the US dollar, okay, and so of course that dollar has had an impact on all of those major commodities, but also elsewhere. And we can look at how that has particularly played out. So for this, as always, I have a dollar profile. So this is Aussie dollar on the daily, Kiwi dollar on the daily, Euro dollar on the daily, dollar CAD, pound dollar, dollar yen, dollar Swiss, and importantly, the dollar index. Let's have a little look at that. Just bear with me one moment. Let's clear those down and bring this all out. If we look back on this year, at the last kind of quarter, when Trump won the election, we had a real double bottom at 24 at the 100 number and the 200 period moving average, and we just launched ourselves higher. Okay, and then we started the year 2025 with this real double top. Okay, and before price really, we had that kind of real dollar screaming move down, and then we sort of drifted away, and then actually we formed a double bottom here, and that double bottom was formed with that was the first Fed Reserve cut, and that sort of pumped the price up to the 100 area once again, that big round number. We drifted lower off that. Okay, it looked like I thought maybe we're going to sort of just form a higher low here before we move back up to 100, but we've started the week kind of on the downside, but as I've said, this is going to be a strange couple of weeks, and so the kind of candles that form might not necessarily be the ones that you want to pin all of your hopes on, because they're just they're not fully formed. Certainly not like weekly candles. If I look here on that daily chart, as I said, we were getting up to 100, big round number, and we were double topping there at where the 200 was. We came down off it really quite significantly. And as I said, I wondered, could we form just a sort of like a mini inverse head and shoulders as part of the bigger double bottom? But we'll see. Okay, we will see. Okay, I think I wonder if maybe if we kind of drift back into that sort of 97 area, perhaps for the over the next day or two, that might be we just want to sort of keep an eye on that. And as I said, we could have lots of volatility, or we could have no volatility, depending upon the news and the data and other economic or other economic impacting news that we find coming out. And certainly, the start of this week has just been real kind of sell-off of the dollar there, hasn't it? It's been a really, if I go down to that hourly chart, that's been quite some significant sell-off of the dollar this week. Okay, that's that's a real Christmas present if you're bearish US dollar. So we will watch and see how that particularly plays out. Okay, ladies and gentlemen, time flies when you're having fun. All good things come to an end, and we have met the end of our Monday Market Matters webinar for today and also for 2025 as well. I hope you have found today's session useful. I hope that you get a chance to sort of work your way through the elements of it, okay, and learn from the some of the sort of the comments and ideas I've shared with you. Please do the exercises because it will help you, all right, make 2026 your best trading year. On a broader note, thank you to everybody who's joined us over 2025. It's been fantastic to be able to provide these, okay, and to help everybody on their trading journeys. I wish you a very, very happy and healthy Christmas period, New Year, and I hope that it's going to be a fabulous trading year for everybody. So, as Ollie says, thanks, Paul. Really good session. Hope you have a happy Christmas and catch up in 2026. Yep, thanks very much for that, Ollie. Great to have you here. Thanks for the kind words. For everybody, have a fantastic holiday period. I wish you the best of endeavours in your trading journey. And I look forward to joining you for Monday Market Matters in 2026 on the 5th of January. Take care, everybody, and we'll speak soon. Thanks.